Assalamu alaikum, bismillah ar-Rahman ar-Rahim, and welcome to a special edition, one could say, of the Tabadlab Policy Roundtable. These are a series of conversations that we conduct, and today is a really special one because we're going to be talking about the World Bank's, I think, biannual Pakistan Development Update document, and the most recent version of this document covers the period from July 2021 to December 2021. Of course, it's, I think, as always, but especially today, it's an opportune time to be discussing the state of the Pakistani economy. But perhaps disappointingly to those that chase the ambulance of breaking news, we're not going to be focused so much in today's discussion about how well the economy did or didn't do over the last 6 months or 9 months. I think everybody is reasonably conscious of both the weaknesses in the economy and some of the strengths. And we'll have a presentation by our colleague and friend from the World Bank, Rafi Khan, who's going to talk about that. Most of today's discussion is going to be on the focus of today's conversation, which is financing the real economy. This is a special section within the World Bank's Pakistan Development Update. And we've assembled, I think, with the World Bank's help, a fantastic panel of speakers, but in particular, a really fantastic keynote speaker. So to introduce the keynote speaker, I'm going to invite Shabi Ali Mohib, our friend and colleague from the World Bank, to come in and take over and introduce our keynote speaker, the Deputy Governor of the State Bank of Pakistan, Ms. Seema Kamil. Over to you, Shabi.
So thank you very much, Mosharraf, and also everybody. Welcome to this very important series of our development updates. And as you know, Pakistan has done very well in coming through the COVID pandemic so far. And which is actually low compared to other South Asian economies. So Pakistan's private investment rate is about 10% of GDP, while other countries in South Asia are more about 20 to 25%. So how do you actually double private investment? And that's where the financial sector comes in to finance the real economy, and that's the focus of the development update. We know that the financial sector is very nice.
So Shabi, we've had a couple of, Shabi, if you can hear me, we've had a couple of interruptions. And while I've been able to make out most of what you said, we missed a little bit. Maybe just give us a summary version, and then maybe we can go to the keynote speaker.
Sure thing. So the summary is that Pakistan has done well coming out of the COVID pandemic. The key is, how do you accelerate growth and sustain it? And to sustain growth, you need to double. And that's the focus of our development update. So what we wanted to do is to invite the Deputy Governor of the State Bank, Ms. Seema Kamil, who essentially has also been the president of and CEO of UBL, one of the largest banks in Pakistan. So you know all the issues. So over to you, Seema. Thanks again for taking the time to join us today. Over.
Thank you. Thank you so much, both Mosharraf and Shabi, for your kind words. And I'm really happy to be here. So assalamu alaikum, everybody, and good afternoon, good evening. And I'd really like to thank the World Bank for holding this an important seminar, particularly on financing the real economy. As you said, Shabi, we've done well through the COVID pandemic, and a lot of that, while we're blowing our own trumpet, has been due to the efforts made by the State Bank and the banks together, and in particularly my colleague Samar Hasnain, who will come onto the panel later. But I would, and particularly on the real economy, my area of the State Bank looks at that really, and we try to look at areas on how we can assist the financial sector in financing the real economy, because that has been a challenge, but I think we're happy to say that we've been trying to put some, shall we say, carrot and stick on that, and to be innovative as well. So, in my remarks today, and I hope I don't overrun because I think we've been doing quite a lot, will be on the areas that are underserved within our whole concept and our whole vision of financial inclusion. And I will be talking about small and medium enterprises, housing and construction, and particularly mortgages for the low income sectors, agricultural finance, Islamic finance, and then, of course, digitization of our economy. So, this is quite a lot to cover, and I will have to rush a bit to keep to your timelines, but I do hope that you will find the comments and useful. So, the first area I'd like to talk about is SMEs. And I think, as we all know, they are estimated to be about 5.2 million SMEs in Pakistan, of which uh, they make up about, they are 90%, and they make up about 40% of our GDP. But yet, the banks, for a number of reasons, some of them valid, given credit risk, and some of them because of what we call lazy banking, that there are easier ways of making revenue. So, financing to SMEs has lagged, although we have done a number of things. In the last year, we have done four very important things that I would like to highlight, which we think will move the needle. The first, which seems extremely basic, is that we never had a cross sector, cross government definition of SMEs. And until you have that, your interventions and your measures become blurred. So, for that reason, along with the government of Pakistan, we finally defined SMEs as small if they have an annual sales turnover of up to 150 million, and medium if they have a turnover between 150 million and 800 million. This is a simple definition, and we hope that it'll be effective. The second very important, very innovative thing that we did. Now, banks are often reluctant to lend to SMEs, and some, as I said before, the non-performing ratios are high. So we have come up with something which I believe is very innovative. We actually offered to the banks refinance from the state bank at a very reasonable rate of 9%, as well as risk coverage of up to 60% by the government of Pakistan. The innovative part was that we asked banks to bid for this business. And then we chose a number of banks, 8 banks, based on large, medium, and small, and very interestingly, those that will come in with collaboration with fintechs. This is only up to 10 million rupees, and then the other very distinguishing factor is that they have to be collateral free, because as you know, it's very difficult for SMEs to come up with tangible assets to support their credit requirements. This has been recently launched, and it's actually encouraging, the results. And as of our latest data, which is towards the end of April, 7.1 billion has been approved and 5 billion has been dispersed. And we expect that this will rise exponentially. Now, the other thing which we are working on is, of course, the risk perception and the need for credit enhancement through guarantees. So, along with the Ministry of Finance and FCDO, we have made available, and it will hopefully be functional, and it's been a long time coming because of a number of hurdles, the National Credit and Guarantee Company, which will soon be available to provide credit guarantees to SMEs, loans to banks, which will again assist this sector in financing the real sector. And the last point, my fourth point on SMEs, is the Kamyab Jawan Youth Entrepreneurship Scheme, which again is an initiative of the government of Pakistan, and the State Bank is the implementing agent for this. And we have 21 banks, and the government provides a markup subsidy and credit loss guarantee to the banks. And this has been really very successful and transparent without political interference. And so far, there have been cumulative disbursements of 41 billion to 25,000, nearly 26,000 youth. And we have a target for 25% women. And that's an area that we're still working on because we have just 12% women in this. But that's really a major part of our work. And over the years, and it's a long time, from December 14 to now, we have managed to grow SME financing to from about 300 billion to 520 billion. And we've also started giving non-mandatory targets to the banks, and we hope to have 800 billion in financing. So that was SME. The other area that we're very proud of, really, and worked extremely hard on is housing and construction with a subset of low-cost housing mortgages. So we set up about in June of 2020, just a couple of months before I joined the central bank, a steering committee which has now met 50 times every 2 weeks, and at first every week, to try and do something about banks lending to housing and construction. We tried to improve the enabling framework, and we did a lot of work on that. But then we also gave mandatory targets to banks, and that also made a difference, both of those. And I think the very good news on that is in June 2020, the housing finance portfolio of banks was just 148 billion. And as of March of this year, it is now 404 billion, which I think is a remarkable achievement for the real sector because, as you know, there's a number of industries. Then, of course, there's the government's markup subsidy scheme, and the World Bank has been very supportive of that in the risk sharing via the Pakistan Mortgage Refinance Company. This was a long time. It took us a long time to get this going, and the pace at the beginning was frustrating. But now we believe it's taken hold. And this low-cost housing, the number of applications approved and disbursed have increased manifold in the last 1 year, with approvals reaching 190 billion and disbursements 70 billion. To this sector, about a year and a half ago, we were at actually close to zero. Maybe some of the rich people did get mortgages, but the rest did not. The third area I'd like to talk about today is the agriculture. We all know how important it is. It is 65% of our population works in agriculture. And the State Bank has been introducing a number of initiatives for this. For the financial year 21-22, we gave an agriculture target of 1.5 trillion to the banks, and 1.4 trillion was in fact disbursed. Agricultural borrowers towards the middle of last year were 3.5 million, of which we are pleased to see that 93% are marginalized and subsistence farmers. This year, we've again decided to be a bit innovative, and we hope that it works. One, we've made an agriculture scoring model for banks so that banks, they compete. One of the things we've found is that once you set banks targets and you get them to compete as well, it makes an enormous difference. And then we've introduced the concept of champion banks for areas like Balochistan, which are extremely underserved. And we will hope that that will boost up credit. We are also working very actively on electronic warehouse receipt financing. And I think finally, and I've been seeing this for my banking career, it is making headway. However, impediments remain, as they always do. There is still low financial literacy. There's a lack of coordination amongst the key stakeholders. There's a lack of financial services providers in these regions. And then, of course, climate change and the effect of that and the practices that are needed. The fourth area I'd like to talk about is Islamic finance. It has been gaining importance in both globally and within Pakistan. And Pakistan is growing very rapidly. And it is really critical to financial inclusion because a lot of our population, or the dominant, is Muslim, and many of them shun banking because of faith-based reasons. And now we have acquired a market share of 19% and 20% in assets and deposits, respectively. And we have a very ambitious aim to take it to 30%. And then we will hope very much, and again, the housing market, which referred to low-cost housing, 48% of disbursements and 56% are in Islamic modes of finance, which of course is very important because when people buy a home, they would like it to be under an Islamic mode because it's their home and it's very personal to them. And of course, in the Roshan digital account, 47% of the investment in the Naya Pakistan certificates is in the Sharia compliant mode. Of course, faith-based banking still has a long way to go, and we have a lot of work to do in that. The last area I talk about is digitization. And our biggest enemy for this country is the use of cash. And sadly, the use of cash has even been growing despite whatever we've been doing. And so one of the things we've brought in here, which is part of our national payment strategy, has been our micropayment gateway, which we call RAST. And RAST really means, for those of you who don't understand, it's the right way. It's doing things the right way. And so going away from cash and being documented and being financially included is the right way. So that's why we call it RAST. And it's now becoming increasingly popular. And again, we've this time used a lot of media, a lot of television, a lot of social media to promote this. RAST is got three principal use cases. It's Pakistan's first instant payment system. And really, it is state of the art. It's based on ISO 2022 message standards. And it has three use cases. The first is government to pay bulk payments, which is largely government to person. And we are working on it. There is still a bit of a struggle with the large government entities. And we're hoping that that works because that will cut down a lot of leakages, plus make things very efficient and low cost. The phase that we are in right now, which is person to person, allows individuals to transfer payments to other individuals or friends or family, real time, secure, and instantly. It's now picking up pace. We now have completed 2.7 million transactions with 29 billion of amount. And out of the roughly 20 million mobile app users, 9 million have already formed RAST IDs. They don't have to remember account numbers and IBANs anymore. They simply use their cell phone number as an alias. So this is revolutionary. And the last one that is yet to come and will be, we hope, towards the end of this year, is person to merchant, which is our third use case. And this will allow individuals to make electronic payments through QR codes, request to pay, simply tapping on your phone, and will give an enhanced user experience and will, again, we hope, make cash less attractive. So as we often say, we want inclusion and banking for all but the illicit. In the end, I'd like to mention that we at State Bank know that some work has been done, and we are very conscious that much more needs to be done as well, both for financing the real sector and for our role in it. Hence, we are all focusing on this, and we look forward to new and more innovative steps. Thank you for listening to me. Thank you.
Thank you, madam. I just want to say, I think I've said it several times publicly, and of course, I've visited the State Bank and I've seen directly the impact that your leadership and Summer's leadership and the former State Bank Governor Raza Bakir, as well as Dr. Murtaza Syed, who is now the acting governor. I think this is a leadership group at the monetary regulator and at the Reserve Bank that is the most forward-looking and the one that has really adopted the role of stewardship for policy leadership. And I think that maybe unfairly, sometimes I know that, colleagues at Tabadlab have been quite critical of that adoption of a policy role. But we've also acknowledged that in the gap that the executive leaves, maybe it's important that a regulator is stepping in and serving those valuable policy sort of shifts. I think particularly in housing and on digital financial services, I think the nation is going to look back on this period as maybe one of great importance, inshallah. So thank you for your leadership and all your colleagues. I know it's not just the top. I know there's many unnamed colleagues and friends and Pakistanis who are serving the bank. And so to all of them, I think we owe a debt of gratitude and looking forward to seeing the impact of all these changes.
Absolutely. And thank you for your kind comments. And any suggestions, try to be as open as possible. So we would be very happy to hear of any suggestions. Thank you.
Fantastic. I'm sure that our esteemed panel, is going to bring those in. Madam Deputy Governor, thank you again. We're going to, I know how busy you are and how difficult it was for you to make time for the World Bank and for the Tabadlab. Both of us are hugely grateful to you. What we're going to do now, I believe, is transition to the airing of a video. I would love it if you could stay for the video.
I will.
Yeah, and then Rafe is going to give a presentation. You've already been given this presentation on the Pakistan development update, so we'll let you go at that stage. But thanks again. I'll ask my team to now play the video, and then we'll go to Rafe, and he's going to give us a presentation on this document.
At only 11% of GDP, private investment in Pakistan is very low. This is a significant constraint for sustained and higher economic growth. How is this problem related to the state of Pakistan's financial sector? Let's take a closer look. The financial sector facilitates growth and investment by intermediating capital between savers and borrowers. It uses deposits raised from savers to extend loans to borrowers, such as individuals, households, and small businesses. However, Pakistan's financial sector is under-delivering on its role as an intermediary and facilitator of growth. Most of the economy is cash-based and operates outside the formal financial system. Only 21% of Pakistanis have bank accounts. Bank credit to the private sector has decreased over the past decade and is much lower than in other comparator economies. Even when banks do lend to the private sector, most of the credit goes to large businesses, leaving critical sectors underserved. So who exactly does the financial sector serve? In addition to big corporates, banks have one large low-risk client: the government. Almost 70% of all bank credit goes to the public sector, increasing by 442% over the past decade. So, by lending to the government, banks make big profits while taking very little risk. Banks are happy to lend to the government, and the government is happy to borrow from the banks. But what about firms? Without borrowing from the financial sector, firms can't finance their growth. This stifles private enterprises, innovation, and economic growth at large. How do we solve this problem? A long-term solution is to reduce the government's fiscal dependence on the financial sector. In the short to medium term, 5 sectors offer significant opportunities for financing the real economy. 1. Digital finance, to foster greater financial inclusion. 2. Capital markets, to create alternate channels for capital formation and intermediation. 3. Risk capital, to spur entrepreneurship and innovation. 4. Market-based development finance, to promote growth in strategic and underserved sectors. 5. Microfinance, to increase access to finance for small and medium enterprises and lower-income households.
That was great. And for maybe a more detailed treatment of some of those really important data points and recommendations, I'd invite our friend and colleague Rafe Khan at the World Bank, who's one of the principal authors of this document. I don't know if we're allowed to say that about bank documents, but your big secret is out, Rafe. So well done on this fantastic piece of work, and over to you to just walk us through the document. You have, I know that you've been promised a certain amount of time, but you have 5 to 7 minutes, just because I want to get as much of the panel in as possible. So I apologize if your time has been shortened, but we really want to get to the discussion as well. So over to you. We're also struggling with your connection, Rafe. So we'll give it a couple of goes before we give up. I'm going to ask my production team to send me a message in the chat room to see whether they can hear you, because I definitely can't, and that probably means the audience can't either. We can see a frozen image? Okay. Rafe, maybe you can try and reconnect. Yeah.
Okay.
So, oh, maybe now. It looks like we just got him. Let's give him one more shot. Team, if we can bring Rafe back in. It looked like his connection had suddenly improved. He's dropped off. Okay. Look, maybe we can have that presentation later on, or maybe we can do without it. I'm going to try and quickly introduce the great panel that we have, and we'll start the discussion. And I'll throw out to each of the panelists, one key aspect that I think deserves some conversation. And if we get Rafe back on a good connection, then he'll have a chance to go through the report. Rafe, you look much better. You sound better.
Can you hear me now? I hope this is better.
We can. This is much better. Well done. You caught us just on that, because if I'd started introducing the panel, I would have just gone to them, and then we would have put you in perpetual wait mode. But go ahead. You have 5 to 7 minutes.
Phenomenal. Thank you so much, Mosharraf Saab. I hope you can still hear me, and I hope you can see my screen as well.
We can hear you and we can see it. I'd ask you to just make your screen sort of full screen so that we're not in the Microsoft PowerPoint page, but in the actual slide.
Can you hear me? Because I'm having trouble hearing you. I'm not entirely sure if I'm coming through.
You're coming through loud and clear to me.
Okay, phenomenal. Okay, so let me just blow up my screen. This is still working, right? I hope you can see my screen. I can't hear you.
Yeah, Rafe, just start presenting. We'll ask the audience to be patient with the connection as well, and give Rafe a chance to get to the second or third slide.
Good evening to all of you, ladies and gentlemen. As Mosharraf Saab mentioned, I'll be giving a very brief presentation on the special section that we put together for the Pakistan Development Update on financing the real economy and on the intermediation potential of the financial sector in Pakistan. The presentation is structured much along the lines of the special section itself, but given that I don't necessarily have a lot of time, I'm only going to be focusing on the main messages. If there is interest, I would strongly recommend that you go through the special section, because there are some really interesting messages which are contained within it, and also some really interesting data points. So jumping right into the presentation again. Last 2 decades, and this is in comparison or in contrast to the rest of South Asia, where growth has averaged about 4.7 percentage points per annum. What we also know about growth, ladies and gentlemen, is that growth in Pakistan has been cyclical. It's been episodic, and it's come in boom and bust cycles, which have tended to manifest themselves in every 5 years or so. And the last and perhaps the most important stylized fact about growth in Pakistan is that growth in Pakistan is predominantly anchored in consumption as opposed to being anchored or linked to investment and sustainable and sustained sources of growth, and these sources are investment and exports. And the importance of this pivoting, the importance of moving the growth model towards investment exports is highlighted by the fact that current levels of investment, and in particular private investment in Pakistan, limit Pakistan's growth potential to between 2.5 and 3 percentage points per annum. And this is incredibly low. It's most certainly not enough for an economy the size of Pakistan. So there's a need for higher levels of private investment. And despite this need,
All right. So what we have is a technology situation, and of course, the quality of broadband connectivity in the country is one aspect of this, but luck and providence is the other. Therefore, we're gonna actually give up on, not on you, but on this effort, and we're gonna get to the conversation because we have a great panel that's waiting. I think you've done phenomenal work. Your colleagues have done phenomenal work, and we're going to be talking about it not just today, but I think for the next several weeks and hopefully months to come, because it's really important work. The point you made about the need for greater investment, I think, needs to be repeated over and over again, and the vast disparity between how much the banking and financial sector caters to government borrowing needs and how much it caters to the private sector is a huge gap. And then within that gap, maybe the more concerning thing is the degree to which the financial sector serves underprivileged and disadvantaged Pakistanis, all women writ large, certainly everybody that is outside the elite, and everybody that is outside the those that own and control capital. To discuss all this, we have a fantastic panel. I'm going to quickly introduce everyone. They're all friends of mine and should be well known to most of those who are watching, because I presume most that are watching have an interest in these issues. And so many friends that are watching will be familiar with Sadaffe Abid. She is a fantastic and phenomenal Pakistani leader. She works and is the founder of Circle Women. She's also the vice chairperson of the Pakistan Microfinance Network. I first met Sadaffe. She may not remember because she was already a superstar at the time, and I was nobody. I still am. But Sadaffe was at one of the most important microfinance organizations in the country, namely Kashf, and this is decades ago. So I have a long memory, and Sadaffe has been a long-standing contributor to microfinance, to women's empowerment, and to voice and agency for women leaders, in particular in the private sector. Thanks for joining us, Sadaffe. We're also joined by Syed Samad Hasnan. Pretty much everything that we see that is development finance, that is related to development finance policy from the state bank, is the purview of Syed Samad Hasnan. And so we're really happy that the executive director of the state bank for development finance, finance for SMEs, housing, agriculture, infrastructure, all of these key areas of intervention is with us. Thank you for joining us, Samad. We're joined by Faisal Aftab. Faisal and I go back. Somebody asked me if I knew Faisal, and my response was, I've known Faisal since before either of us care to remember. But Faisal is one of the drivers, I think, of the huge success that Pakistan has enjoyed over the last year and a half, in particular in terms of venture capital financing for startups, and particularly for technology startups. Faisal himself is a really successful founder and co-founder of at least a dozen really important organizations, but a couple that were really big, which is why he's now able to finance his own fund, which we know through Zayn Capital. But also, I think what's really fantastic about Faisal is the fact that he works with so many other venture capitalists, and this collaborative culture that these guys are developing is a really new aspect of big money in Pakistan. And so great to have you with us. And I'm going to ask you to talk more about this new attitude, Faisal, that I see amongst venture capitalists and private equity folks. Risha Mohyeddin, who's the global treasurer of Habib Bank Limited. HBL is Pakistan's largest bank. I think that part of the reason why Pakistan will successfully graduate from where we are today, which the Pakistan Development Update highlights really artfully and really importantly. But one of the reasons why we'll be able to transition and graduate from where we are to a better place is because banks like HBL and their boards and their leaders like Risha and many others, his colleagues, whether it's his CEO, his head of risk, or many others, they will come together and help redefine how banks treat the idea of risk. So Risha, I'm going to come to you and talk to you a little bit about your own risk appetite personally, but more importantly, professionally in your role as the treasurer. And then we'll also, I think, be joined by Namus, who is a really important friend and colleague at the World Bank, and I know works on a whole range of issues, but I've had the privilege of working with Namus and for Namus on issues like housing, which I think is central to this whole development finance development finance conversation. So I welcome this group, and without sort of spending too much time, further time on this, maybe start with you, Sadaffe. We keep talking about development finance and finance for women, but when we look at the data that's been presented in the Pakistan Development Update, I wanted to start with on a positive note, but it's hard. Maybe you can give us some good news on this front, maybe perhaps from the microfinance sector or the microcredit sector. How has financial services as a sector changed, if it has in any way, in order to serve women better? And what are the things that you are optimistic about right now in terms of the changes that are taking place? Sadaffe?
Great. Thank you so much, Mosharraf. And, I do remember that we go back a long way. So it's wonderful being back here. And thank you to World Bank for putting this together along with Tabadlab. So, yes, I do think there are things for us to be hopeful about. Microfinance sector as a whole has 8 million borrowers, and 44% of those are women. It really started with the women's movement. We have all heard of Dr. Yunus and how he pioneered the whole concept of collateral-free loans for women. So I think that has really taken off. However, in the last 2-3 years, growth has been slow in the microfinance sector. As Sima also mentioned, unfortunately, financing for women in Pakistan through the formal banking sector remains low. I am disappointed to share with all of you that only 7% Pakistani women actually have bank accounts. Only 7%. Let that sink in today's world. So there's a huge untapped opportunity that we're sitting on. I think the female economy is the economy that needs to be paid attention. And that is where we can give our GDP and the much needed economic growth that is needed for Pakistan a boost. In fact, IMF has calculated that at least a 15% boost would be added to Pakistan's economy if we had more women joining the economy itself in terms of being economic active agents, but also in terms of financing. I'd also like to share with you, this is not just a Pakistan problem. So that's where I think we do need to be a bit more realistic, that financing for women is actually a global problem. I'd like to share with you that 73% women globally have expressed dissatisfaction with the banking sector. This is data collected by the Financial Alliance for Women. And they have also seen that 34% of businesses that are owned by women have unmet needs, financing needs that have not been met. And 80% of household decisions in a family are either influenced by women or made by women. So really, the female economy does need to be given attention. I think what happens in Pakistan and what I see happening in many organizations is that the seriousness or commitment to really bringing women in as clients, to bringing women as key leaders in the economy is not that strong. The business case, this really needs to be treated as a business case rather than a CSR activity or something good to do. So I think that's where I would say the hope and the promise is that if we do start bringing more women into the economy, and in that respect, the Banking for Equality policy that was put together by Mr. Raza Bakir, Seema Kamil, and the rest, is actually a very good step forward, which is actually encouraging banks to set up female champions, to have windows in banks for accessing women clients, to designing products that are tailor-made for women. So these are very early stage steps in terms of having a policy and a framework that have been put into place. So that is why I am optimistic that this will get better. But Pakistan does have one of the widest financial inclusion gaps. I'd also like to share with you very quickly some other metrics which can also support us, but are hindrances at the moment. So if we look at mobile phones, access to mobile phone now offers huge possibilities in terms of connections, skills, communities, and also digital finance. But even here, Pakistan has one of the widest mobile gender gaps. What does this really mean? So women in Pakistan are 38% less likely than men to own a mobile phone. This gets worse when you look at mobile internet. Women are 49% less likely than men to have access to mobile internet and 94% less likely to use mobile money. But this is where I feel, Mosharraf, there is hope. And when we go further, I'd love to share with you what Circle, the nonprofit that I set up, is doing, because we are actually on a mission to empower 1 million women through financial inclusion, including digital literacy, financial literacy, and mobile wallets. And I think working at the bottom of the pyramid is critical for Pakistan's economy. I'll pause over here.
Absolutely. Thank you, Sadaffe. I do want to come back to that. One of the points that we made in a report we did when we thought COVID, was beginning to be over, which was over a year ago, was exactly the massive disparity in access to smartphones in particular. And of course, as I already mentioned, we did a study recently on broadband accessibility and direct fiber to home connections. And all of these actually represent gaps in financing at the end of the day. And somebody, maybe I can bring this question to you, maybe a little bit unfairly, because you've already done so much. And I've mentioned, with housing and with digital finance. And I know that you focus on agriculture and finance for SMEs and housing and infrastructure. But, the idea of maybe making smartphones more accessible by either forcing or incentivizing banks to be more alive to that kind of consumer finance, or the idea of rewarding banks for being more amenable or responsive to female clients, especially knowing what we know about client access, right? That one of the big reasons why there are so many unbanked Pakistani women is because of the strictures and mobility challenges. How do you see all of this coming together? I know digital is one big part of the answer, but just walk us through the thinking at the State Bank of Pakistan currently and what you're planning for the future. Samarsa?
Thank you, Mosharraf Saab. And it's just always pleasure to be with you, and the audience here. I would like to thank World Bank and Tabadlab for that. But before responding to your question, whenever it comes to the issue of financial inclusion, so always the central banks feel like challenged. And when Sadaffe was mentioning of the percentage of financial inclusion, there's no second thought that Pakistan, in terms of the financial inclusion, is very low, but when it comes to the financial inclusion of women, it's even far less than that, But I want to put the correct number to that, and of course, probably Sadaffe, your number of that 7% is coming from the demand side as some sort of survey. But the actual number, because I do have that number in front of me, which is actually the unique active accounts, and I'm talking of the active accounts, not those which are passive, and I'm talking of the unique account. I'm just discounting, when it comes to women having two accounts, so I'm counting them one. So if we translate that, then it becomes something like 14.53 million accounts of women in Pakistan. And if we convert that, in terms of the adult population of women in Pakistan, so that translates into something like 23%, which is again is very low. So I'm not, doubting that, but there was a credit needed for that. Now coming back to
just on that data point, Samarsa, because it's a really interesting one, and I'm sure we have different data sources. So I'm sure Sadaff's is valid in terms of the source that she's used, and yours is valid. Of course, you're the state bank. One of the really interesting things that I would love to learn about is how much of those 14 million accounts were prompted by the BISP slash SAS sort of movement, because a big push, I think, was caused by that, especially given that there weren't digital channels available, and I think it was, if I'm not mistaken, Bank Al Falah in the north, and if I'm not mistaken, it was HBL in the south that had those contracts. So maybe Risha could address that as well. But it would be great to learn how public policy helps drive female inclusion in terms of bankability and banking. But I just thought that would be an interesting number if you have it.
Yeah. Actually, yes, there is a contribution of that, but that's not so big. You see, that's not so much in terms of, say, for example, 10 to 15% of the total 14 million account can be attributed to that. The source that I'm giving is the actual data that we are getting from the banks, and that data has been has been scrutinized on the basis of the CNIC, individual CNIC. So that is the actual data that we get from the bank side. Now, coming back to your point about this smartphone availability of that, you see, with the women, one of the policy solution that the state bank tried to come up with was, you see, instead of going for the smartphone, we have actually introduced that, and soft launch has already been done, and the massive launch would be done once the mass media campaign is ready for that, is the use of the normal phone account, you see, which is not the smart even. So what would happen is that there is a scheme that is called Asan Mobile Account, AMA, and here you see any person having a normal phone, not the smartphone, can dial, you see, static and then phone numbers and hash, and can open an account with any of the banks in Pakistan. That the process is extremely simple, and that would take care of the issue of non-availability of the smartphone with the women, because anyone can open with that, open an account and can undertake transaction with that. Massive launch of that would very shortly happen, probably within a month or so, once the media campaign for that is in place. So that was one thing that I wanted to say, you see, from the financial inclusion angle, from the accounts point of view. But Mosharraf, you see, I would like to, you see, mention a couple of points. I don't know whether we would be having a chance to come to that, you see, subsequently during the discussion on mortgage side, or would you be bringing that, or and in the SME side, or should I mention that upfront right now?
No, I'd love to hear about it. I think that's really one of the key things that we are expecting you to contribute to the conversation, to do talk us through both the housing, the massive expansion of the housing finance sector over the last couple of years, and also the SME work that you've done that I'm less convinced about, but I'll let you convince me and the viewers.
Thank you. And again, you see, I would like to challenge here, you see, the World Bank report here, and Mosharraf, you too, and I'm not being the defensive on that, but I'll give you the numbers, exact numbers, so that we can, you're right, that a large amount of the credit is going to the bigger firms, the corporates, the small corporates. But let's come back to the housing side. And one of the fear that when this a scheme of Mera Pakistan, Mera Ghar, or the government markup subsidy came, there was a fear that since the scheme goes up to 1 million, you see, loan of a house. So our initial fear was that probably the banks would be lending to the upper side of this tier. But I tell you the numbers, and that would bring, you see, my perspective to that which segment we are trying to cater to. So out of the numbers that the Sima has mentioned, you see, our deputy governor, that out of 190 billion, which is almost 200 billion of mortgages approved and 70 already disbursed, you'd be, you see, interested to know that the average loan size is 3.3 million. So that shows that who were the takers of that particular facility of the mortgage. So out of the total, you see the average loan size of this is 3.3 million. And that shows that the people who were, you see, on the bottom of the pyramids are slightly upper than the bottom, are availing that. And the key, you see, key point in that is that for the first time in Pakistan, banks have started using informal income proxy models. You see, we have just heard of that, you see, in other countries, but it has happened for the first time that banks, and Risha is here, the banks are witness to that, that now even if someone is having an informal income, does not have a proof of any formal income, he still can have a mortgage finance, you see. And there is a model that has been developed, you see. It's a simple Excel sheet model that has been developed by the banks themselves. Central bank provided the support to that, where the payment surrogates are entered. Your children's education fee is entered into that. Your mobile phone payment and the top up is entered into that. Your electricity bill is entered into that, and then the model calculates how much you can pay as an income, how much you can pay as an installment. So on the basis of that, if you see that the average loan size is very, very small. So I just wanted to mention that point. On the SME side, you're absolutely right, you see. That the total financing to the SME as a part of the total private sector credits is very, very low, you see, 6 to 7%. But the key feature of this collateral-free scheme that DG Sima has mentioned, and probably she has not mentioned that because she didn't get into the details, is that for the first time, the central bank was providing liquidity at a very cheaper price, you see, just 1%, and was allowing the bank to keep a margin of 8% so that they can develop their own systems, they can invest their human resource, and State Bank is not giving any target, unlike you see other mortgage schemes or other schemes. It was the banks who themselves decided to come up and to to become the part of this scheme. So we are not giving any target, and I'm very happy to share that, as DG Sima has mentioned, that the scheme is already is taking up, and I hope that in the days to come, the banks would do that on themselves. No one would be forcing them. It would start happening, like you see what has happened with the credit cards. No one push, you see, from our side, from the central bank. So over a period of time, we'll see that both SME and mortgage. I'll come to the rest of sectors when I'll have the second round of discussions. But I'll stop here.
Assuming that we do have a second round, but we will come back to you and to Sadaffe as well. But I want to bring Risha and Faisal into the conversation as well. We're gonna go to Risha in a second because we're gonna hope to get the internet connection that he has sorted, because I think there's some connectivity issues there. Faisal, I want to say two things, and maybe they're not even questions, but maybe two kind of theories that I want to share with you and get your comment or reaction or response to them. One is that it was inevitable that we were going to have the kind of venture capital growth that we've seen in the last little bit. And I'm very conscious and actually critical of how small it is relative to India or relative to South Korea or relative to Indonesia, but relative to where we are in Pakistan, it's actually massive, the kind of last 18 months, 24 months. Part of the reason is that where else was the money going to come from? So this is maybe a criticism both of the state bank or the regulator and of private banks, who are, in a sense, a little bit spoiled because they get to basically make all their bonuses and their profits on the back of government borrowing. And I'll give a chance for Risha to respond to that as well. But one is the inevitability aspect of this risk capital. And the second, which I think is really relevant to this conversation, is that so much of the venture capital attention in this country is focused on digital financial services, on fintech, and on some of the investments that you've made. So maybe you could talk a little bit about whether or not this was inevitable and what has driven this venture capital sort of boom. And I know part of it is patriotism and a lot of kind of Pakistanis like yourself, but I think a lot of it is also just almost kind of natural and organic. And the other is, talk us through maybe with some examples of some of the fantastic work that's happening in fintech and digital financial. Faisal?
Sure. Thank you so much for having me here. So I'll start off. I guess the opportunity in Pakistan is really based on several factors. The first and foremost is we had a delayed 3G and 4G launch. So we in earlier panelists were talking about smartphones and adoption of smartphones. Well, the one of the most critical elements is data. So if you look at our comparable markets, the MENA region, India, Southeast Asia, 3G and 4G launched in 2006 and 2011 roughly. In Pakistan, we didn't actually auction the licenses till about 2013. And really, the adoption took place in about 2014, and really 15 is the acceleration point. So, as an investor, when you looked at Pakistan's total addressable market of online users, it was really tiny. I mean, out of 220 million odd people, at the time, the government official numbers from the PTA were something about, I think, 40 million or so. But we have to look at the active numbers, and the active numbers were not really more than 18 to 20 million, which is fairly small. Fast forward to the post launch of 3G and 4G, we became one of the fastest growing broadband adoptions in the world. Around 2020, we were sitting at roughly around 100 million data users, with around 75 million active data users. That's critical mass. That's almost the size of some of the populations in countries in Europe. And so Pakistan was always a fairly, I would say, important country because we're the fifth most populous country in the world. But it's more the infrastructure catching up. One of the other catalysts that really led to why money started rolling into Pakistan is there's a factor of interest rates and in value extraction from comparable markets. So let's start with that. So all the markets around us, India, MENA, Southeast Asia, effectively they're about 5 to 10 years ahead. So most of the value has been extracted from those economies in terms of venture capital and the technology startup equation. In Pakistan, obviously, it's a huge opportunity. That's a nascent market. The other big factor really was one, the central bank, State Bank of Pakistan, allowed mirroring of cap tables. So there was an old law that didn't allow any Pakistani resident to own shares of a company abroad. And investors have a big fear of capital controls. So consequently, they weren't going to wire money directly to Pakistan. They would prefer to have it in a holdco structure, and then effectively where your IP rights can be protected, and then you have an operating company in Pakistan. So that change in 2019 was a huge comfort level in terms of capital flowing in. And then post the pandemic, the biggest catalyst was interest rates. And when I say interest, I'm not talking about domestic interest rates. I'm talking about reserve central bank interest rates, such as the US Federal Reserve. Once they drop rates to near zero, the risk on environment just skyrocketed. And effectively, you saw within exactly a 6-month period after interest rates were lowered in the US, you saw basically a influx of money coming in. And then as new investors that were seeking had a higher risk appetite started getting exposure to Pakistan, they actually realized it's a mini India. And when I say it's a mini India, it's in terms of talent pool. When you look at Pakistan, there's a significant chunk of, when you look at big tech or finance, private equity, hedge funds, a lot of Pakistanis exist in those markets. I actually, for my own analysis, I looked at Bangladesh as a market potentially to invest in when I was putting the fund together. And actually, in Bangladesh, you don't find that many expats in finance. I could barely find about, I think it was around 30 or 40 at key levels. Same thing in technology in Silicon Valley. Pakistanis are in fairly formidable places. So the combination of that, a massive, vibrant freelance community where a lot of self-taught programmers and trained tech talent, and a huge consumer market out there. So I think the combination of all three of these factors and awareness really kicked in where money started flowing in. I'll jump into your second part of your question in terms of of fintech and why everyone's investing in fintech. So look, the internet is really built on layers, whether it's the TCP/IP layer, your video over IP layer, voice over IP layer. We're in the exchange of value disruption, where effectively money itself is merging with the internet. A lot of the policies, whether it's you look at a push for cashless systems, or what the State Bank is doing at RAST, very similar to UPI in India and many other places. We have to move towards basically digital settlement of money from cash, as well as the analog banking system that exists today. When I say that, it's the analog systems such as ACH, FedWire, and SWIFT. Settlement periods are just too long, and the world's problem is velocity of money. Pakistan's problem is basically documentation of the economy. Both are solved with digital settlements. And I'm not necessarily referring to cryptocurrencies. I'm referring to central bank digital currencies potentially in the future. That is the ultimate solution when it comes to documenting the economy. So what are we doing as venture capitalists? We know we're heading in that direction. So we're front running the market, and we're identifying all the on ramps for effectively settlements in the future. So those on ramps are e-money wallets. Those on ramps are lending platforms. A lot of the SMEs, banks, which in Pakistan are not able to lend lot of times to the SMEs, not because they don't want to lend. I mean, we've spoken to multiple HBL, Al Falah. All these banks are very eager to actually open up their balance sheet for actually unsecured loans to lend. But the problem is that their investment committees are very geared towards traditional corporates, where they're used to collateral and loan to LTVs of effectively 50 to 70%. So
Yeah.
what fintechs are doing is they're actually creating that layer where they're capturing multiple data points, whether it's coming from, as a gentleman before me from the state bank was mentioning, your historical bill payments and multiple other data points, but also the e-commerce layer. So a lot of e-commerce platforms that have existed over the last 3-4 years, such as Daraz, and there's numerous other iterations. You grab data from that, eventually it'll start to get centralized and pooled. And initially you start to prove your NPL. So we've actually, believe it or not, at Zayn, we have a debt fund as well, which primarily focuses on debt structuring. We've actually structured a ₹1 billion line for a pretty prominent fintech through one of the top 5 banks in Pakistan. So they're ready to take exposure. I think the whole equation has to be looked at a step-by-step process and as an evolution. And Pakistan is there. We're heading in that direction where pretty soon you're going to have financing available, not just for smartphones, but also for housing that can actually be doled out quickly. So and we were talking about housing, but what I will say is I've actually invested in a lending tree type of platform in Pakistan that's effectively taking applications from individuals and trying to approve them quickly. The problem is, just like a bank account in the traditional banking system takes 2 to 3 months to open up, which is just, I mean, frankly, it's just too long. In the same way, when you put those applications in, the effective process is too long, and many times then the data becomes stale, or the interest rates fluctuate, or the property is not available. So a lot of these things have to be considered. And I think when you have that perfect collaboration of the banking sector, not actually becoming fintechs, but actually working with fintechs, is two different ethos in terms of what a fintech is. The founders there are not, they don't come from the brick and mortar economy. So their building mechanism and how they approach the market is very different. And we've had talks with all the big banks. They were looking to get into venture capital. My advice was, you guys have the balance sheet. Open up your balance sheet to worthy fintechs and use them as the conduit to lend, because that's how this ecosystem is going to grow. I'll give the floor to someone else, because I can go on for quite a bit on this. There's a lot of data points. So I'll give some of our other guests a chance.
Well, we'd love to bring Risha in, but before I do, just maybe comment for me really quickly and for the audience, Faisal, the potential impact of rising US Fed rates, because that, I think, is a worry on many different fronts. But from an impact on venture capital, are we about to see the drying up of venture capital liquidity and sort of risk appetite because of higher US interest rates? Or how do you see this playing out over the next 6 to 12 months?
Yeah, so I mean, at Zayn particularly, we became bearish in October of 2021, and it was no rocket science there. It was basically Fed giving forward guidance that their primary concern is now rising inflation versus the employment market, or the equities market. So and we were seeing those high inflation numbers. So this is actually a pretty bad storm. I mean, it's like a hurricane and an earthquake at the same time in terms of the global capital markets. And so with the Fed raising, I don't think the Fed has raised rates so quickly in history. Everybody was in a massively risk-on environment, and that's what resulted in a lot of capital spilling over. So yes, I do think there's going to be a massive liquidity crunch coming in venture capital, not just in venture capital, in all markets, but specifically in the riskiest of the asset classes. We prepared for that. Most of our companies were told to basically start raising aggressively and to also taper down the burn in their actual growth. So they have runways of about 15 to 18 months. Speculatively, we think the liquidity crunch could last all the way to December 2023. to possibly even Q1 of 2024. Just depends on when the Fed starts when they lower rates again. And usually that happens when something pops. So keen eye on that.
It's a fascinating conversation, and I think certainly it's been influenced by commodity prices and what's happened with Russia and Ukraine. But you're right, the direction of travel was set 6 months ago or more. Risha, I kind of set that up mischievously, because in a sense, the logical sort of next step there is that if there's going to be a global liquidity sort of drying up, and if there's going to be Pakistani entities that have cash, the first place people are going to look is an entity like HBL. Do you maybe start us off with, I have a bunch of questions, but maybe start us off with, do you think it's unfair for commentators or observers to look at, successful banks and large banks like HBL as potential ambulances in terms of cash and liquidity vis-a-vis the kind of shrinking market over the next maybe 1 or 2 quarters? Is that an opportunity, do you think, for HBL, or do you think we're expecting too much from banks in general? Risha? Sorry, Risha, we're struggling with your video, so maybe turn off the video and try again. No, unfortunately, we still can't hear you. In fact, we can't hear you at all. We weren't going to be particularly. No, please don't apologize. Risha is apologizing offline, but we'll try and reconnect. Maybe I'll take this to Sadaffe. Sadaffe, you're kind of not vaguely, but very specifically familiar with, cash constraints and liquidity constraints and the impact of interest rates on banking operations, and particularly on how that impacts things downstream. Is there a moment here of opportunity as the rest of the world kind of goes in one direction, and because of that, even the risk appetite of venture capital funds begins to shrink, that perhaps these really large banks in particular, who are not just making a killing right now, but if you look at the state of government borrowing and public debt, they're going to continue to make a killing for I don't know how long, but certainly the economy is not about to change fundamentally over the next 18 to 60 months. Doesn't that represent an opportunity, Sadaffe?
Mosharraf, I would agree. I think there is an opportunity, but it requires banks to change their mindset, because right now we don't see that happening. But I think if banks are futuristic, if they want to really invest in the next 10 years, 20 years, they should be looking at risks differently. They should be designing new financial products, especially tailored towards the needs of the youth. There's the millennial generation coming in. Their needs are very different. And then the women's market. Women make really great customers. They stick to the bank. They take their time. They may not come in very rapidly. They ask a lot of questions. But you need to understand their needs and preferences. So I don't see any bank really looking at financial products and the women's market very seriously. HBL has become a part of the Financial Alliance for Women. That's a very good step. And they do support She Loves Tech, which is one of the world's largest women and startup competition. It is run by Circle. And just last year, just a few months ago, one of our runner-ups from last year, MediQ, Dr. Saira, she has raised $1.8 million. Again, not coming in from Pakistani banks, but coming in from people like Faisal and others who have funds, and they're coming in. But we have various startups, but their needs are very different. They do not have collateral to offer, and they do require support in the early stages in terms of financial planning, budgeting, networking, mentoring. But I think a bank like HBL is getting in that space. With engagements like with She Loves Tech, they are getting to know this space of young women entrepreneurs, women startups, early stage startups. So I hope that they are building that appetite, and they will be seeing this as a good market to go in. I'm hopeful about it.
Samad, I of course, Sadaffe is well qualified to have that optimism, but I want to challenge that through you. I want you to respond to this, because to me, these opportunities have existed before. I would say the banks have, at least in my entire professional life, so we're looking at a quarter century now. I'm much older than I actually look. And the entirety of that period, we've heard about these massive cash, and this is a little bit unfair. This is not a criticism of HBL. If anything, HBL is kind of a market leader in terms of how open and visibly kind of keen it is to engage on issues like digital and on certainly on women's banking things. So not to pick on any one bank, banking sector as a whole makes these massive profits off guaranteed returns because of public debt. In your conversations with banks, what have you found in terms of willingness to agree or accept the fact that unless banks themselves don't choose to redefine risk in Pakistan, we'll never see a change in the quantum of lending to SMEs, and we certainly won't see a big shift, even if we contest the percentages. I mean, the credit to private sector, this is on page 18 of the Pakistan Development Update, and I would want everyone who's watching, or everyone that eventually watches, to go to figure 3.5, and you look at the credit to the private sector as a percentage of GDP. And, you know, the only country below Pakistan in a list of Pakistan, India, Bangladesh, Turkey, Malaysia, Egypt, Nigeria, and Morocco is in fact Nigeria. So with that record, in terms of, you know, that's a joint performance by the state bank and the banks. Samad, what do you think is the likelihood of maybe a redefinition of risk? Risha, we're glad to have you back. I'll come to you once Samad is done with this response. Samad?
Yeah, thanks, Mosharraf. And I'll be very candid, you see, on this question, you see, because we tried that in other areas. Actually, you see, in case of mortgage, and again, I'm coming to the mortgage because I would tell you the secret. Of course, Risha knows that, and the people here from the banking side would definitely know about that, you see. When we started this, actually, it was not taking off. And then the central bank, you see, I mean, we kept on pushing it. We kept on asking the banks to take a risk, but they did not. So almost after 2 decades, because I remember that the last time when we gave some sort of targets to the banks, we did that way back in 90s. So almost, you see, almost a quarter century, 25 years, the central bank gave target for the first time for the mortgages, you see, not for the other sectors. We keep on giving target for the agriculture, but most of those are indicative, you see, those are not the mandatory targets. But in case of the housing, what we did is that we used a carrot and stick policy. We also, you see, offered carrot to the banks who met their targets, you see, in terms of housing and construction. So they were given a relaxation in terms of the CRR. They were allowed to keep it at a reduced rate, you see. But at the same time, we did not meet the targets. The penalties were also imposed. But the important point is that once we did that and we kept on monitoring that and we kept on doing that, what has happened is that after some time, and that was, you see, less than a quarter of a year, you see, 3 or 4 months, what we have started seeing is that the bank have themselves started doing that, you see. And I remember that Habib Bank was initially, you see, a bit, you see, behind the curve, but now is in the top banks, you see. Apart from the Al-Falah is, of course, you see, number one in terms of mortgage. I'm talking about a specific sector to give you an example. But now Habib Bank has caught up, you see, and now the banks are feeling it as a matter of pride to publish in the newspaper that they have joined 1 billion club in terms of disbursement, 2 billion club, 3 billion, 4.5 billion. So the message that I want to give is that in that particular example of the credit sector, the central bank used both carrot and stick policy. And I think probably, I'm not saying that the same should be used in the other sectors, but if the banks want to take a risk, they can, and they have proven that.
Mosharraf, if I may jump in very quickly, I just want to say that this is very good what Samar has highlighted, because I think what we need is leadership, the CEOs, the presidents of the bank and the board committed to championing these initiatives, because otherwise it's not going to happen. We know leadership really matters. So inclusive development, women's participation, empowerment, these have to be mandates that banks and CEOs and boards have to champion.
Absolutely. And I think, just because HBL is in the room and because we've been picking on banks for about, 40 minutes without Risha having had a chance to speak, I should say that HBL in this regard has been particularly ahead of the curve. I think Aurangzeb Khan goes head and shoulders, ahead of the curve in order to reinforce the appetite of the Habib Bank board and the leadership to want to do better. But Risha, coming to you, and your connection is now dramatically better. And even though we get to see less of you because of that limited screen, we're delighted that we'll be able to see and hear you. There's a bunch of questions that have accumulated. I've forgotten the last one that I asked, but let me pivot quickly and say that if you guys can do it in housing finance because the state bank was a little bit coercive and there was a little bit of public policy pressure, $1 billion dispersed. Well, it's not dispersed yet, but $1 billion committed. 200 billion rupees is over $1 billion. That's a lot of money, especially given where we started from. If we can make that kind of an advance in housing, then maybe it's just a matter of, instead of complaining to the banks, which I do often, when I come to Karachi to you guys or to other friends, maybe I should just go to the state bank every time and get them to force the banks to do more. Is that a good approach, Risha?
This direction for being very much a part of helping the economy to grow, helping all sectors, including agriculture, including SME and so on. This comes from the board. So this is not something just the management feels, okay, this is a good idea. Our board and our management really buy into this. So this mantra really needs to come from the top. But turning to your question, over the long term, what really succeeds is has really pushed the banks and been successful in getting the banks to lend into the mortgage market. But even $1 billion is what, 0.3% of GDP, and so our total lending to the mortgage market is less than 1% of GDP. Now, can compare that to, say, India, which is over 10%, Malaysia, which is over 30%, and you're really starting to
So Risha, we've lost you again, and we lost you before too, but last time you came back in. Maybe turn off the video and try one last time before we give up. Not on you or HBL, but at least on this effort. Yeah, I'm gonna ask my colleagues to actually just let Risha know that we couldn't hear him, and maybe I can take that question to Faisal. Faisal, how do we kind of actualize the potential that Sadaffe has talked about and that Samad has articulated? I think everything that we could have asked of the venture capitalists, they've done. I mean, the only thing I would ask is just greater scale. But as you've already outlined, given the higher interest rates, we might be looking at a bit of a slowdown for the next little while. How do we get the banks to fill that gap?
And just commenting on that slowdown, I don't think that's necessarily a bad thing. Right before really when the rates are raised, you always do end up in a bit of a bubble. So we actually needed a bit of this valuation rationalization. And good companies will continue to survive. And they should learn cycles if they want to be long-term companies. But coming to banks, I mean, look, when you look at it worldwide, very basic things that exist in developed markets didn't exist in Pakistan. So, for example, bill payments or just me being able to use online banking, that's all a recent phenomenon in the last 5 years in Pakistan, and that's really a lagging indicator in terms of where the banks are technologically. So the fintech layer, in my opinion, is extremely important for Pakistan in terms of how the banks are going to connect with the end user, the consumers, especially from an adoption point of view. And so, as I mentioned, the balance sheet is what the banks have ultimately. And the tenacity required to build a lot of these fintechs, the speed with which they have to be built, the user interfaces, we've seen, individuals founders do it much better because they have an equity upside interest in this equation. Whereas whenever we see an existing brick and mortar setup attempt to enter the tech field to offer consumers a friendly user interface, it just doesn't work because employees just don't have the same level of motivation. So I wanted to kind of break that up because I think understanding these components will help each entity understand which lane to stay in and play to their core strengths. So look, banks have the biggest balance sheets. They're extremely cash rich in Pakistan. They've been making good spreads on parking money in government treasuries. So I think it's time that opening up those balance sheets, especially once the state bank has underwritten quite a bit of their risk is for SMEs, they can use this particular layer that's emerged to start lending to end consumers. Now, if you look at, I'll break it down that a lot of the sectors that are highlighted that need to be addressed, how each company is reaching those sectors. So let's take B2B, for example, right? Where FMCG platforms that are basically targeting retailers and fulfilling FMCG goods to them. I mean, they're actually collecting data on these retailers and seasonality patterns and identifying what their receivables are. A lot of the ledger plays are doing similar conduits and collecting those data points. When you look at some of the logistic fintechs, they're actually doing the same thing for online merchants as well as retailers that are selling online. And a lot of them are factoring plays using products as collateralization. But ultimately, they're getting that data of their collection rates and what are some of the cancellations or defaults. So leveraging that data and banks positioning, they're actually going to get to every one of those end consumers. And I think that's the conduit through which lens through which we have to think in the long run. Doing the same thing over and over again and not really getting traction. We've seen lots of programs come into play where I think the central bank is trying to get money out to particular segments. But whenever you go through the banking layer, it just doesn't get to the end consumer because banks aren't designed to take that level of risk. And that's where fintech comes in. I'll do the same analogy as the 2008 financial crisis. The central bank in the US effectively lowered rates to lend. And you didn't see money actually make it to the end consumer in the US. Effectively, what ended up happening was banks kind of sat on it, right? And this time we saw stimulus checks. So banks actually skipped the banks to try to stimulate the economy. So in Pakistan, I would say that's been perpetually what's happening, where the banks are effectively they take deposits and they park money in treasuries. And I'm not targeting any specific banks. I mean, obviously we need a lot of the banks, but I'm just stating the obvious that's been taking place. So a collaboration between fintechs and banks, just to kind of summarize it, is effectively probably the best thing that can happen in this country for financial inclusion across, I would say, all social demographics, economic demographics, and gender. So just my 2 cents on that.
Yeah, no, I deeply appreciate it. We've run over the anticipated time. What we wanted to do is bring in some questions, and amazingly, I have to tell you, often it's said that the YouTube comment section is where hope goes to die. But I'm looking at the comments under this conversation, and I'm blown away by the quality of participants and the quality of questions. In order to help us answer some of those, I'll ask my colleagues to bring in Namus from the World Bank, who I'd introduced earlier on, and hopefully connectivity issues will not prevent us from hearing from her. Hi, Namus. Can you just say hi to everyone with your mic on so that we know that you're...
Hi. I think we've moved to a slightly superior wireless, so
much more superior. We need to get HBL into that room as well for the next one. Look, I have a bunch of questions, and I'm going to run through a couple of them. We have Nadeem Ul-Haq, who of course is the VC over at Pied, and for some of us, policy hacks. He's a permanent.
Is Mosharraf stuck now? Does that seem to be the?
I thought I was fine, but
It's us.
Yeah. Okay, so we're going to run through some questions, and I'll start with Namus in terms of asking her to answer them, but we'll go through the group, and whoever wants to respond, please do. We have Nadeem Ul-Haq from Pied. He's asking, is SBP into directed credit or subsidy business? I think that's a critique. I'll let Summer handle that. And then he's also asking, no wonder inflation is rising. I guess he's asking about interest rates. Maybe we can answer that, maybe we can't, but we'll come to that. The Jafar Askari, who I also know and who works at Karandaz and is just a fantastic economist, very, very professional. He has a couple of questions. The last one I can see is, how can you sustainably, without subsidized refinance schemes, increase lending to underserved sectors while the risk-reward equation for banks remains heavily influenced by government borrowing? This is essentially, to me, this is the heart of the financial sector question. It's where we started. We didn't really get a chance to pick on Risha as much as I would have liked to, partly because of his connection. But this really is at the heart of the question. But maybe somebody you can speak to this question a little bit. And then I think another question related to the SBP is Mutahir Khan, who's again, who's a startup entrepreneur, but also has a really great reputation as a economist and an economy reporter and correspondent. He asks whether the state bank he's asking, the state bank mentioned the provision of gender disaggregated data in banking on equality policy. When can we expect that? So that's a very direct question, I think, for you to answer, Samad. But maybe, Namus, we can start with you on some of these questions, and then we'll do a couple more rounds.
Yeah. So can I respond, Musharraf?
I think you'll have to, because Namus has disappeared.
Okay.
So go ahead, Samad.
Okay,
Yeah.
okay. So on the first question of this state bank into the business of targets and subsidies, no, the central bank is not, you see, of course. And that is exactly the reason that we did not do it. As I mentioned, for quarter a century, we did not do that, you see, for any sector. But when the central bank finds that there is a massive failure in a particular sector, you see, compare that. Why did we pick up for the mortgages? Why didn't we pick up for the SMEs? Why didn't we pick up for the agriculture? Why didn't we pick up for the gender? While there are market failures there as well, but the quantum of the market failure is far bigger in case of mortgages. It was less than 0.5% of the total GDP as compared to whatever has been earlier mentioned. So therefore, we picked up one sector and we did that targets and subsidies only for that. And that again, you see, for some period. Once the banks come on the road, they would do it. And I forgot to mention one thing, and of course Namus is here, that in case the mortgages, there is also a risk-sharing facility that was supported by the World Bank. Namus is here. That has also played a role, you see, because the banks which were not habitual of taking risk have started taking risk. And the key purpose is that once you pull out that facility at a later stage, the bank would be lending that. And the second question on the gender as disaggregated data, yes, in terms of the accounts, we already have that, you see, available with us. And for the other sectors, like in the women, lending to the women, in terms of SMEs, in terms of agriculture, and other sectors, we have started collecting that data from the banks. And in the next quarter, we'll have the first set of that data, because that's one of the pillars of the gender, you see, equality policy of the central bank. So yes, we have started getting that.
Okay, great. Thanks. That was comprehensive. Namus, did you want to add something? I think there's a couple of things there that I think you could speak to really eloquently.
So the question was around the role of the central bank with regards to subsidies and directed lending, just so I'm clear. So, I mean, I think one thing that, we should be clear about, we at the World Bank, obviously, believe in market-based solutions. We wouldn't want the market to be there should be an equilibrium. Risk should be appropriately priced. And as such, as a principle, directed lending is not something that we think is an optimal solution in financial markets. Concurrently, also, rather than interest rate subsidies, de-risking is our preferred kind of approach, because obviously, as I said, the pricing of the risk should be appropriate. That is the bedrock of an efficient financial system. But I mean, going to Samar's point, there are aspects of the financial system which are, locked. And as Samar Saab said, the World Bank has recently approved a risk-sharing facility for housing finance. But again, it's very strategic. We are complementing the government's interest rate subsidy program, and we are de-risking. So I think it is the mandate of the central bank. That's a discussion, a far broader discussion. But in principle, I think we are clear on this, that that anything where there's any strategic intervention into the market, it should be market based, it should be non-distortive, and our goal is always to limit the fiscal impact on the sovereign.
Great. I'm going to reserve comment and judgment just because of time, and also because we don't want to get into an ideological war here in terms of what we can reasonably expect the private sector to be able to do in this country and its track record. Najib Rahman has some great comments and observations. Not all of them. I don't think there's any trolling there, but some of them are really good. So one of them is, since Rast transactions are free, how will it be sustainable in the long run, and how is it funded? So that's, I think, a good question. And then he has some comments. A couple of them lean into the kind of questions that Nadeem was asking. But he also asked, as per a study by PIDE, he says Pakistani government's economic footprint is estimated to be 67%, including 200 plus state-owned enterprises. So where's the space for private investment, even foreign investment, when everything is getting crowded out? I think that's a reinforcement, but I'd love to make it. So that's why I read that one out. But the first question on Rast, maybe Samar, if you know the answer to that question, or Namus or anyone, how is Rast being funded? We're gonna leave that for maybe another day then. There's a couple of others.
But
Go
Mosharraf,
ahead.
yeah. That someone raised, you see, about what if the subsidized financing is removed from this? How would the bank land? So my response to that is that fine, that subsidized lending is available, you see, in some of the SME schemes and the mortgage, you see, but not in case of agriculture. Financing to the agriculture is purely done on the market-based price. And if you look at in the last 5 years, we have moved from something like, you see, 800 billion financing disbursement to 1.4 billion disbursement now. That's purely on the merit basis, purely on the market price basis. So that means that if the banks start taking risk in a particular sector and believe that that's working, so that they do it. Agriculture is an example of that.
Great. By the way, Sadaffe and Faisal, just feel free to just jump in to respond to any of these. A couple of comments that I think are really important. I think this alludes to something Faisal also talked about, and the reason I tried to ignore it, but now we can't because these comments are great, is that I think there's a convergence between this conversation and the conversation about data privacy and data kind of governance laws in Pakistan. One of the questions is, or comments is, Zayn says SBP does not push banks enough to disseminate info into common citizens. I think he's right. And I think another question on data is from Najib Rahman again. He asks, why doesn't the state bank publish the number of unique banking customers and unique branchless banking M-wallets? This will provide a clear picture on financial inclusion. At the moment, it's based on surveys. And then another data-related question. Well, these aren't questions. There's more of a commentary again from Nadeem ul-Haq, who doesn't like international consultants or the IMF or the World Bank, which, he's not alone. But it's good to have that voice in the room as well. On the question about data, where should the push come from? Does there need to be a citizen movement for more open data? Are we going to just rely on people handing the cabinet members social media rules before they walk into cabinet meetings that get approved, and then we find out about it later? Do we rely on the goodness of Samar and the World Bank? Or where does good data governance come from in terms of customer, in terms of KYC, and then in terms of protecting the privacy of customers and protecting the privacy and the profitability of the business intelligence units of our banks and fintech operators and people that you've invested in, Faisal? This is really a question for all of you, but maybe Faisal, you can start off. I'll just need you to unmute, Faisal. We can't hear you.
Am I unmuted? Can you hear me?
Yeah, go ahead. Go
Okay.
ahead.
Yeah, so I think, look, on the data front, the open banking initiative from the central bank, I think, is a huge push forward. It's something that is going to require more nudging for the central bank to do. Banks obviously are going to be guarded on their transaction data, historical transaction data. That's very, very valuable, especially from a lending point of view. And there are examples of platforms like Plaid in the rest of the world, where basically they become these intermediary setups, which allow fintechs to kind of become an operating rail for fintechs, where they get data, centralized data from other banks. But then, also at the government level, there's institutions like PRAL that are sitting on a goldmine of data. So I feel like one of the problems in Pakistan is that everybody's kind of protective. Even luckily what I do is I'm in the private sector, so I deal very little with the government of Pakistan. But whenever I do, it's like basically, the Ministry of Science and Technology versus the Commerce Ministry are not exchanging notes, and they're basically replicating the same stuff over and over. And if they do have data, they're just going to be guarded. The FPR is probably sitting in also probably another goldmine of data. So at some point, there's got to be a unified approach to dump that into a permission database, and just similar to what Nadra is, right? I'm not saying that Nadra should be handling it, but some sort of a pooled area where then basically banks and licensed and regulated entities such as fintechs can get access to that data, and that'll be a huge component. But even if that doesn't happen, just to kind of, one of the beauties of disruption is that disruptive platforms don't really care about if the government is lagging, right? So my case in point would be what PTA, what Netflix and YouTube were to PEMRA, what WhatsApp and Skype were to PTA. Effectively, the regulators in the financial sector are going to become that to fintech if they don't actually become proactive versus reactive. And we will create our own data in the fintech world. So what we're doing is, like, for example, a lot of the lending platforms are putting their APIs into platforms like Daraz or some of the other e-commerce players out there that have historical data sets. You'll start collaborating with Jazz Cash or EasyPassa and start pulling data pools from there. So when it comes to disruption, it always finds a way to, even if there are basically limitations, to continue to move forward. So I'm not really worried.
No, I hear you loud and clear. But Sadaffe, if I could maybe turn this to you, because
if I could just just to add to kind of Faisal's point.
Please
I
go
think
ahead.
I would like to emphasize what Faisal is saying. There is a lot of data in Pakistan. It's just not integrated and leveraged effectively. Globally, the Nadra infrastructure in and of itself is a huge asset. It's a digital asset which can really be leveraged, multifold. And this is, I think, one of the keys to unlocking effective financial intermediation in Pakistan is going to be the integration of data, better leveraging FPR, PTA, what the banks have, etc. And eventually, like neighboring countries have really done very well by monetizing data. That would be the future of this. So, I do think, and I think Samar Saab can also come in here. The State Bank is doing some creative thinking in this space, but this will be fundamental to unlocking effective intermediation in Pakistan.
Sadaffe, I wanted to maybe shift this to you. One of the aspects of this that is troubling and is, I think, for me, an area of concern is I'm all for disruption, but there are some serious privacy-related and safety and security-related concerns when it comes to data, especially for women, and how data has been used in the past. Now, some of that is outside the scope of a banking conversation, but a lot of it is related to the mobility of data and the free access to data. We've had plenty of data leaks, and we've had many cases of individual cases and groups as well of harassment and bullying and the ability to blackmail people based on data. How much of that prevents a free entrance or access to, for example, fintech and owning a smartphone for women?
I think actually digital safety does have an impact on women, particularly in terms of joining in, because we have seen this in our work when we work with women, that the fact that they're not digitally literate, they don't know about digital safety, and there is this view that there is going to be a lot of harassment, bullying on the internet, and also that I maybe get part of a scam or a fraud. So I think we do need to enhance awareness on digital safety, particularly for low-income groups, marginalized groups, women, minorities. That is really important. If we're talking about inclusive finance, this has to be an important piece that needs to be built in. I would also add that for data, I also feel that while we have a lot of data and like gender equality data is going to be great, but awareness on how to use data, I think that's going to be an important piece. Banks need to actually be made aware of how they can use this data for designing financial products, for policies. So I think that's another piece where probably State Bank can nudge them. And then a missing piece of data is data on women-led businesses, women-led enterprises. I don't think we quite have that. And another element, Mosharraf, I wanted to bring on was that Faisal was talking about collaboration. So banks should be looking at collaboration from the microfinance sector. Microfinance players have 8 million plus clients. They're in rural, urban markets. They're in agri. So they could be great sort of partners, especially for the inclusive development goal. And that is something that when I was on the board of National Bank, we tried to champion by building relationships with the microfinance sector, which made National Bank one of the biggest players in terms of access to finance for microfinance. So I think we have to look at some unusual partnerships if we want to disrupt the system and if we want to reach out to those who don't have access at this moment. And I'd really encourage more experimentation happening.
Thanks, Sadaffe. We've run way over time. I just want to give all the speakers one last chance to respond to the last round of questions. So I'm not going to repeat any more questions. We have some great questions from Aliza, Amin, from Sameh Noor, from Hiba Fatima. The last one that I thought maybe merited some treatment was Jafar's question, another question from Jafar, where he's asked, what's the future of development finance operations at the State Bank of Pakistan, especially given discussions with the IMF on moving these to a state-owned DFI? I think this relates to the wider question of whether a regulator should or shouldn't be in policy. I don't think it should, but I appreciate that its entry into policy has actually helped move the needle on some key transformational impact areas in the country. Samar, any kind of information you want to share with us on that front?
Yeah, thanks, Mosharraf. Thanks for that question. You see, actually, the work is being done here, you see, and a consultative group has already been formed, which is, you see, considering option of shifting, you see. And when I say shifting means phasing out in a gradual manner, because some of the refinance facilities are pretty huge. You see, for example, the one which is directly related to the exporters, which is the export refinance, is pretty huge, you see. And that working group is thinking of how to gradually transform or to shift it from the central bank to other institution. But the key point is which institution? Which one is that institution? Are we going to set up a new institution for that, a new development finance bank, or some existing? So work is also being done, you see, for gradual transformation of that. Say, for example, Exim Bank, which has been set up for the promotion of export and imports, but work is being done on that. So still nothing concrete has come out of that.
I think some cynical folks would say, I mean, I'm not cynical, but some cynical folks, Samar, would say, with the FBHC and the NDFC and maybe half a dozen of the partnership funds with some of the Middle Eastern countries and the GCC countries, with all of those development sort of arms already out there, what's another one or two? I'm not going to force you to respond on that. Faisal, any final sort of parting thoughts? Because we wanted to close. I should say thank you for your fantastic and deep insights, Faisal.
Well, thank you for having me. Look, I'd like to share some long-term kind of versus Pakistan is a very short-term country in terms of thinking. And I think many of our fiscal and monetary problems are derived from that, where we don't tend to carry policies over a 10-year period. The disruption we're in is a pretty profound disruption. This is the exponential adoption age of technology. And I think that whether it's not going to wait for anyone to adapt to it, it's going to take over regardless. And the digital assets component, I just wanted to talk about because I know it's something that's not on the radar today, but it's almost like comparing landline telephones to basically what we have today in the form of WhatsApp and Skype or Viber, or the medium that we're in today. That's the level of change that's coming in how the financialized economy is going to get tokenized. And frontier markets like Pakistan, if they don't get on top of this, there will be DeFi that's going to have an impact here. And a lot of the technology layers that are coming are just going to move forward. So, everybody's got to think more from a 10-year perspective. The adoption rate is going to be velocity with which it's going to get adopted is going to be very fast. It's not going to be 20 years. As soon as people get online, the median age in this country is 22.8. You're looking at by 2030, a fair chunk of the population that's going to be dealing with the digital world and ignoring the brick and mortar. So we should catch up to that in not just our private sector, but actually the government itself and policymakers as well. So just some parting thoughts from my side.
Very, very valuable, Faisal. And that last data point is the one that I love to share. It's my favorite data point about Pakistan. The median age is 23, is what I say, instead of 22.8, rounding up. But that means, just to give it some real meaning, 110 million Pakistanis are below the age of 23. That is an astounding data point. Sadaffe?
Yeah, I think I'd add by saying that, as we know, Pakistan is one of the biggest last frontier markets. And for any disruption that's happening, we must make sure that women are part of the process. And I think this really represents a huge boost to the bottom line for the bank, for the fintech, and for the economy of Pakistan. And if we are committed to investing in our country, to improving GDP, to creating peace, economic prosperity, we know that women are a very important part to invest in. So that would be my parting message, that when you're designing financial products, processes, systems, make sure you have women in those committees and in decision making and leadership, and design the right products and experiment.
Fantastic. Thank you, Sadaffe. Namus, we can't see you, but we can hear you if you want to quickly give us some parting thoughts before we close out. I shouldn't have said that because we've jinxed it. No, sadly, we can't make out what you're saying, Namus. I'll ask my colleagues to just bring us back. Samad, you get the last word. Samad, you get the last word.
Yeah, the last thing that I want to say is that gender inclusion is the key to economic growth of Pakistan. You cannot have a country to progress when half of your population is out of the formal sector. So, and that is exactly the reason that we are very seriously working on gender inequality and taking every aspect of that. We have got, you see, all pillars covered in that. So, gender financial inclusion is one of the key priority for the central bank.
Well, we'll keep advocating and engaging with the state bank. I'm really grateful to Sadaffe Abid, grateful to Samar Hasnan, grateful to Faisal Aftab, to Namus Zahir from the World Bank, to Rafi Khan from the World Bank, to Risha Mohyeddin, who we didn't get to hear from as much as we would have liked. And most of all, grateful to the friends and colleagues at the World Bank that not only produced a fantastic Pakistan development update, and I strongly encourage everyone to download that document from the World Bank website. Again, the Pakistan Development Update 2022. It's titled Financing the Real Economy. I think it does a really good job of framing the challenge for the banking and financial sector in terms of the opportunity and the challenge here in Pakistan. This has been a long one, but it's been really, really beneficial for me. I've learned a lot. I hope that our audience was similarly enlightened and benefited from the insights that our friends around all of Pakistan were able to share today. Look forward to seeing you at the next Tabadlab Policy Roundtable, and signing off on this occasion on behalf of our friends from the World Bank and from colleagues and friends at Tabadlab. Thanks and Khuda Hafiz.